Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the chairman of Master Investor. Ensure to subscribe and turn on the notifications so that we know when we go live or upload a valuable talk that can literally change our finances for the better. It is all about applying the information that we are learning through the right mentors. It's about investing in financial education, specifically high quality financial education. And as we know it today, modern financial education, because the old rules of money do not longer work. We need to update ourselves. We need to understand how to create wealth, how to utilize the new rules of money to get ahead financially and build a legacy, leave something for the world to make it a better place. Every business is created to solve a problem in the world. And the question is, what type of problem do we want to solve? We could solve many problems. However, if a person is starting out from zero and wants to get ahead financially, then the right question to ask is, what type of problem do I want to solve? Is it worthwhile solving? And we need to create a product-based business. It could be a product that is already created. We don't need to create it from scratch. We can utilize other people's products legally, and we can use debt. We're going to learn about debt as well, because there are two types of debt when it comes to money: good debt and bad debt. And we need to use it as leverage and also to minimize taxes, because debt, generally speaking, is tax-free. And we are going to take advantage of that, because the highest expense humans have throughout their life are taxes. And the reason being is because majority of people tend to work for the highest tax income that exists, which is earned income. And we also going to cover the three types of income that we can build: earned income, capital gains income, and passive income, or also known as positive cash flow. Today's topic is, what is modern financial education? The average investor is unskilled and lacks financial education. Because of this, financial literacy should be our first priority. Summary: the advice on traditional finance is now antiquated and ineffective. The majority of individuals lack financial education, specifically fundamental financial knowledge, and they are unaware of their deficiency. The key to controlling, liberating, and accumulating real riches is financial knowledge. To become great at business and investing, we must adopt several most known lessons for mastering money and building wealth. At the end of today's discussion, we will cover a bonus question: what are the essential points for a business plan? Investing is defined in our community here at Master Investor as having a winning business plan with a lucrative exit strategy. The tax legislation acts like a stimulus plan or an incentive package for the business owner and inside investor, those on the right side of the cash flow circle. Master Investor created the cash flow circle, as we can see the diagram on the screen, and how it divides income producers into various four types of people in two sides: the left side and the right side. We periodically examine the size of the cash flow circle to see how tax law relates to the diagram, and to actively choose which side of the cash flow circle we are operating from. Wealth, at least true wealth, is built on the right side of the cash flow circle. We pay the least amount of taxes on the right side of the cash flow circle. As a business owner, we pay 20%. However, we can minimize taxes using business deductions legally, and we need to have a tax strategy together with a business plan ahead of time, so that we know where to allocate our capital. As we get the cash flow and profits from our businesses and investment, we already have a purpose for that money to go to work harder in the right places, so that we can also minimize taxes and we can take tax deductions. Everything is reported, everything is written. As a business owner and inside investor, here at Master Investor, we understand that ethics is one of the most important aspects and characteristics of a successful businessman. There's no reason why we should jeopardize ever our freedom, our minds, and our time. Those are the three most valuable assets we all have. We need to protect them, and we need to understand how to use them to monetize in a new trend on something that we want to solve. It's about becoming more generous. That's how we become wealthier. And of course, understanding the changes in the law and what is money today, because money evolves. Money is becoming less valuable because it's not longer real money. And we're going to learn why in just a minute. On the left side of the cash flow circle, we see that the employee pays 40% in taxes. Before they get their paycheck, they already have paid the taxes ahead. That's why they get half of their check. And then the self-employed pays the highest in taxes, 60%. On the left side of the cash flow circle, these types of people are working for earned income. On the right side of the cash flow circle, as a business owner and inside investor, we focus on building sound assets. And assets are composed of a system of systems. That's what a sound asset is. Doing the selling and telling for us on autopilot, even while we're sleeping or not working. Because it's solving a problem, and we have successfully put all the systems in place to be able to help the customer and solve that problem. And because we are doing that, we are getting rewarded in the form of passive income. And as an inside investor, we continue to multiply money in sound investing. And we do that by acquiring more financial education. We need to always be devoted to invest in financial knowledge, because in the information age, knowledge is the new money. And since we all have access to this information online, we need to really pick the right information. Not all the information that we find online is going to be the one that we should follow. We need to really check our resources and make sure we do our due diligence, because as we know here in our community at Master Investor, due diligence are the second most important words in the business language. The number one most important words are cash flow. And we want to know exactly what is our cash flow when we are investing. We need to figure that out even before we invest. We need to know exactly the date. We need to know everything about the investment, and when are we going to recoup our capital back. If we invested any of our capital, we may be using 100% finance, and that is something that we master here at Master Investor. All of our partners in our community are encouraged to use debt to create wealth, because debt comes with a lot of advantages. People tend to say stay out of debt, and those people lack financial education. Debt is a tool to become wealthy as long as we apply in the right places. We are going to also be using debt to buy liabilities, because as we become wealthier, we are going to want to have more things, whether it's a luxury item or a vacation that we want to take, something that just takes money out of our pocket. Is going to be paid with the assets income that is producing. Therefore, that liability will be free at the end of the day, because we're not paying for it. The business is. We create and we acquire a business with debt to pay for something that we want. And we don't have to work physically hard to pay for that item that we want, and we can have it over and over again. That's the beauty about having financial literacy, specifically modern financial literacy, where we are constantly updating our core values. And if something changes in the law, if currency evolves, then we understand how to approach it using the new rules of money. As an inside investor, we pay zero in taxes legally, because we know how to utilize debt. We know how to put a plan in action. We have a CPA, we have a tax attorney, we have all the legalities in place. We don't hide any money. We show all the money that we make, and we make sure that we are using the tax code and the corporate laws to benefit our cash flow, meaning that we get to keep more of the money that we're making through our businesses and investment. And the reason why we get to keep is because we are doing the right thing. We are solving a problem that the government wants us to solve, which is maybe housing, technology, food, anything that improves our country and the world. The government is interested in becoming a partner, and therefore it benefits the business owner and inside investor to continue to invest in the sectors that the government wants us to invest, because at that point the government becomes our partner, the laws are on our favor, and we can utilize debt and the tools that the wealthy uses to become wealthier. In today's economy, where is run through debt, where money is created with debt, we must understand how to print our own money legally through businesses and sound investments. And it's something that we will learn through our digital courses here, our Master Investor. It's something that we need to practice and have consistency with, because it's like anything else. In order to become great, we need to dive into the subject and learn how to manage debt, how to leverage it, how to use the right vocabulary, how to improve our lexicon every single day with the right words, so that we can control in a good way our organizations and grow them to the next level. The only way we can grow our organizations is by growing ourselves, by doing it through personal development, which is key in order to build true wealth. So let's think about a problem that we want to solve in the world. Let's figure out whether we're going to start a new product from scratch, or are we going to obtain a product that already exists, and we're going to do a deal with those people who are creating that product, and we're going to do maybe white label, where we use their product and we have a license to do that, and we have an agreement where we can put our brand on that product and they can deliver the product to the customers as we get in them. In today's information age, we have to understand how to use systems in artificial intelligence, because a sound business is composed of a system of systems. That's what a sound business is. It's a system of systems doing the selling and telling for us. And the key is to bring smart people, specialists, to work towards our mission. Every business has a mission, and the mission is one of the 8 integrities of a successful business. And we're going to talk about them in just a minute. When we realize that the government wants people on the right side of the cash flow circle, the business owner and inside investor side, the right side of the cash flow circle, to pay less taxes, it was an eye-opener. There was a time when the financial world was simple. If we follow the old counsel of go to a good school, get a good job, buy a home, save money, and invest in a diverse portfolio of stocks, bonds, and mutual funds, which are known as fake assets here at Master Investor, because they don't put any money into the person's pocket. It takes money out of the pocket every single month. And remember, an asset puts money in our pocket whenever we're not working. It's a sound business. It's a system of systems, and it's making us money because it's solving a problem of customers on autopilot. We will be all right for the most part. Sounds great. But eventually, the monetary world grew more and more complex. Today, money is created with debt. The value of the dollar fluctuated wildly as a result of its removal from the gold standard. Employers and employer-funded defined benefit programs began to switch to defined contribution plans, which required employees who lack financial literacy to invest in the stock markets. And whoever doesn't invest as an employee, then the employer is not required to give them a pension. It's a matching game. If the employee puts in XYZ, then the employer will match it and will put that in to their pension plan. At the end, having that approach is not sane when it comes to investing and building true wealth, because the individuals losing control, meaning their returns will be significantly reduced. Their risk goes higher because they have no voice over their money. They have lost their control, their leverage, and they lost their capital at that moment and continue to lose capital as they continue to pay into that fake asset. If it's not putting money into our pocket, then it's a liability. It's simple as that. When the asset or that liability makes the money, then it can turn into an asset. But it has to put money into our pocket right now, not in the future, right now, for us to call it a true asset. This led to the rise of the financial advisor profession. Additionally, the world of finance grew more and more interconnected, making it harder to monitor the markets. The outcome is a baby boomer generation that is unprepared for retirement and a common financial disaster. For those who are unprepared, the future is not looking too bright for them because they don't have the wealthy context. They don't have the right financial education to be able to thrive in an economy that may experience huge crashes. And it happens, we can study history and look back at all the currencies in history have always fallen all the way to zero, creating crashes, globally crashes. And those who have been prepared financially will always succeed and make tremendous amounts of capital. Even during a crash and after the crash, we can even make more because everybody's panicking. And that's when we take advantage of great opportunities. But we first have to have the wealthy context, which is more important than the content itself. The person that has the poor mindset can have money in their hands and they don't know how to make that money work hard through sound investing. The person who has a wealthy context and money is given to that person, then that person can make that money make money. And that person can raise capital even without that money, can put a deal together and we attract money because money is always looking for places to grow. And as long as we have a good team behind our deal, our investment will attract money automatically. The baby boomer generation failed to learn from its errors and prioritize financial education for its children. The millennials, despite all expectations, nearly 80% of millennials are not invested in the stock market, according to a case study, which is a great thing if they are using their resources to invest first in financial education instead of giving their money away to somebody. If a person is an employee today and they're making a good salary or they're getting a good paycheck every month or every 2 weeks, it's better for that person to start a side hustle and begin to study financial education, invest in the right mentors and the right events, get around their group of people that are doing what he or she wants to do in the sector that the person wants to succeed. There are 5 different asset classes that we can invest in. We have number 1, business, number 2, real estate, number 3, crypto, number 4, paper assets, and number 5, commodities. They all require financial education. Here at Master Investor, we encourage everyone to learn how to build and acquire businesses so that we can use that capital that is coming in from those businesses to buy us other investments, to purchase and invest in sound assets and different asset classes, because that's how we protect ourselves from down economies. When we have investments in all the asset classes giving us passive income, some investments will do very well for down economies. So when one asset class is not doing so well, we still have all the other asset classes doing well because we are controlling real assets with our companies. We're not giving our money away to anyone to invest for us. We are creating our businesses. We are acquiring our businesses under our entities that we control. And we have a voice into what goes on with the business operation. We control the cash flow. Control is more than valuable in today's age than ownership. Poor people want to own everything. The wealthy we want to control. And since the economy works with debt, even more so, control is more powerful, because at the end, when we are using debt, we're not really owning 100% the investment vehicle. However, we control and we drive it from financially point A to financial point B. And we can use it as many times as we want, because we're building trust with the banks, and the banks are in business to lend money. And so as we grow our wealth, we're also going to act like the bank. We may lend money to other businesses and other investors for an exchange of their cash flow. And so the bank is looking to lend money to those who are financially prepared, those who can improve a financial statement, because every business or investment, just like every person, has a financial statement that tells us exactly what's going on in that entity's financial health. When asked why, 40% of respondents said they didn't have enough money. And again, the lack of money is only a problem for the one that lacks financial education. The one that has financial education can raise capital from thin air, because we understand that money is created with debt, and money today is debt. In other words, debt is money. And money is just an idea backed up by confidence. As long as we have the right business, the right investment deal together, put together, and we can present it with a cash flow analysis, we will attract the money. So do we really need money to make money or to invest or to get wealthy? No, what we need is financial education. And then we can use not only our own capital, but we can use other people's capital to make money legally, the bank's money. And the banks are glad to find people like us that learn and appreciate the ability to manage money in the form of loans or debt. According to 34% of respondents, they are unsure of how to do it. Student debt was cited as the cause by 13%. All of these are the symptoms and justifications of those who are financially illiterate. All money advice states that if we don't have enough money, it is because we have never learned how to earn it outside of landing a decent job. Majority of people today have probably received all financial advice telling them to save and buy a house, which is why most weren't taught how to invest. The good news is that high quality financial education is here. We believe the all money fallacy that attending a good school was necessary for success, and as a result, we have so much student debt that we cannot afford to invest. 3 types of income: earned income, capital gains income, and passive income. We can see the diagram that shows us the 3 types of income that exist in today's world, and we can focus our time to the right type of income to create true wealth, and that is passive income, even over capital gains income. Capital gains income and passive income, they come from investing, and earned income comes from exchanging time for money or selling your time at a company for a paycheck. Now, there's nothing wrong with having a job if a person loves to work. However, that person should always learn how to invest, because at some point they want to retire and they need to have enough income coming in that can take care of them even after they stop working. And that can be done through sound investing. It can start with small steps, and as we grow our wealth in the assets column on our financial statement, we can supplement any earned income. Financial literacy fundamentals, a novel characteristic. A couple of years ago, the U.S. Securities and Exchange Commission published a special report with the conclusion that U.S. retail investors lack basic financial literacy and have a weak grasp of elementary financial concepts. They use a variety of sources for their study, including one that came straight from the Financial Industry Regulatory Authority, FINRA, which is the regulatory body and watchdog for brokerage businesses. The financial quiz they use includes a straightforward query that FINRA posed to the general public. If interest rates rise, what will usually happen to bond prices? Will the rise fall remain the same, or is there not relationship? Sadly, only 28% of the respondents actually predicted that bond values will decline. Consider theirs. Only somewhat over a quarter of the millions of individuals with money invested in mutual funds, bond funds, many of which own bonds and 401k plans, understand how interest rates impact bond values as shown by this one simple question. This is only one fundamental question, but it is indicative of the larger issue facing novice investors. Since our system lacks financial education, it is our responsibility to acquire on our own. How big is this issue? The report continues by stating that of the teachers responsible for instructing financial subjects in our schools, less than 20% feel very competent in this capacity because not even the instructors are able to adequately support young people in developing this aptitude and understanding financial literacy is perpetuated throughout our culture in this manner. They enjoy keeping us in the dark, but be sure that a lot of financial counselors would rather us stay uninformed about making our own investments. Wall Street makes a lot of money by managing our investments or other people's investments, taking power away from them, making them more wealthier. The financial gurus at Wall Street are getting wealthier, but the people that are giving their money to them to invest it for them are getting less returns. And that's why having modern financial education is important, because we take control over our finances. We're not going to give money away to anybody to invest it for us, because we can do that. And we can do it even better. We can get higher returns on investments. We can find assets that other people cannot see because they are not investing in their financial intelligence, which is critical in order to become wealthy in today's economy. One of the strategies they employ is to persuade us that we lack the intelligence to manage our own investments. Many of these professionals prosper by preserving our ignorance. Financial planners, stockbrokers, and other fake advisors will have a lot of job security as long as individuals continue to give them authority over their financial future to others. It simply takes a unique type of advisor, because providing the assistance we deserve requires a lot of more effort on their part. Even though there are excellent advisors out there who are willing to collaborate with hands-on investors. However, it is far simpler and frequently safer for a professional standpoint for financial counselors to advise clients to follow the standard strategies of the firm rather than develop a plan that aligns with the client's objectives. Everybody's wealth number is different. We don't want the same thing as far as our lifestyle. However, it is far simpler to just give them an easy talk to be able to get their money. And remember, these financial planners make money through commissions. Retirement plans like 401ks don't involve any personal planning. It is common in our plan that we only have a few pre-made funds to select from. Investing in that manner doesn't increase our knowledge. Additionally, it doesn't need any knowledge from our 401k provider. People will probably never ask for anything more than what they have if they continue to be ignorant of how to manage their own finances. We have learned to put up with anything that these businesses provide. the more they can keep us ignorant, the more money they will make. If we work in the mutual fund or 401k sector, it is the ideal business plan. Since these funds are usually linked to the whole stock market or a particular segment of it, very little skill is required to handle them. This implies that they are placing our future in the hands of the market's fortune with little additional management to safeguard investments. Being ignorant puts us in grave danger. Consider this notion. We may be harmed by what we are ignorant of, and it is likely that at some point in the future we will be. This is particularly true with investments. People with the greatest knowledge will make the most money. The folks who are less informed will lose the most. We are compelled to rely on others when we are unable to accomplish anything for ourselves. Additionally, we are giving up control over our lives when we depend on others. Many individuals have grown completely reliant on outside counselors, such as their 401k providers, to manage their finances due to a lack of knowledge. These mysterious counselors hold the key to fulfilling their aspirations. It could be that we have been led to believe in these anonymous financial advisors because of a fictitious illusion. It is believed that they have nearly supernatural predictive skills that are far beyond our own, even to the point of it is said being able to foresee the future. Furthermore, we are led to believe that ordinary people like anyone out there in the world without inherent huge amounts of wealth from family or someone that just came from humble beginnings don't have the same resources as somebody that came from the wealthy family. Perhaps those people are incapable of posing these extraordinary talents. In fact, we all have the same amounts of chances to become wealthy regardless of our background. In today's information age, we can all have a chance to the American dream to achieve financial freedom and true wealth by providing a solution to the world. We have the information regardless of who we are. We can all go online and we can do our due diligence. We can get all the facts. We can find out who has done it, who are the real teachers. We can obtain all the numbers and resources that our mentors are providing to us so that we can accomplish what we want to and dream of to accomplishing in regards to our finances. So ordinary people in today's age can have the same chances regardless of the gurus out there telling people that they are the special ones. As long as we have financial education and we're investing in our financial IQ, we will have the ability to print money like the wealthy. We can raise capital from thin air. We don't have to have our own capital to invest because we are creative enough and legally raising capital through sound investing because we are putting deals together. We have the right team behind and we have the legalities in place, and it's attractive for other inside investors and other entrepreneurs that are in the come up, and we are going to combine forces and create a solution that helps other people, because becoming wealthy is about solving other people's problems. That's how we achieve true wealth, is to figure out a problem that we want to solve in the market, find a need, and then fill it with a product-based business and create a brand out of that business, not just the business, or because if it's just a business, it's a commodity. It can be replaced by our competition. We need to protect it. We need to make sure that it turns into a real brand by adding intrinsic value and business integrity. Intrinsic value means that we are protecting what we're doing. Whatever assets we are creating, the products that we have, they need to be protected. Our name, our logo, the colors of our brand, everything needs to be created with a purpose, and it needs to have all the legalities on the back end so that no one can take it away from us. and we have all the data that can support any threat towards our brands and what we have going for our lives. Our culture has reached the conclusion that we are unable to acquire these talents on our own, that we are unable to perform the magic that they do. That's what the gurus think. As a result, we are the complete mercy of the 401k firms as we silently kneel before them and lay our futures on their altar. That's what majority of people do. And they lack financial education. They end up working every day, the entire year. And as we know, the person that works for earned income all day has not time to create real wealth because the entire time was used to make earned income, which is taxed at the highest bracket. And that person has no time left during the day to create passive income because it requires time, it requires effort, it requires us to put a plan together. Investing is having a plan. Whoever is investing without a plan is gambling or is just trading. Okay. Apathy, not ignorance, is our worst foe. Not giving a care about what's going on with one's account could be even worse for investors. Rather than think about the alternative, isn't it much simpler to just collect the email, put out yet another quarterly statement, shake our head at the dismissal results, and take no action? Since it might feel overwhelming and challenging to ask difficult questions and take action, it is easy to be apathetic, but in the end, it may cost us a fortune. Is it due to our laziness? Perhaps we imagine that a hero will come riding in on a white horse at the last second and increase the numbers on that quarterly report by a few zeros. In this tale, we are the only saver. We are the only one with the motives and reasons to alter the way the tale concludes. We may direct ourselves toward the future we genuinely want if we are able to overcome the apathy that is preventing us from actively managing our own finances. Don't only invest, be an inside investor. This means getting financial education and applying it actively with a business plan that has an exit strategy. New investors often make the mistake of concentrating on the investments they want to own rather than the person they wish to be. Anyone may own investments regardless of their level of knowledge or comprehension. However, in order to genuinely control our financial future, we must acquire the mindset of an inside investor that will enable us to attain the outcomes we want. We would like gaining a greater understanding of the strategies people use in the stock market to generate monthly cash flow and retire early as we focus on increasing our investment knowledge through financial education. We will eventually come to see not just that it is doable, but also that we can develop the skills necessary to make wise investments that will help us succeed. The ultimate goal is proficiency, the capacity to make the correct decisions that will produce the desired outcomes. Those who are proficient have become inside investors, whereas those who lack proficiency just own investments and are reliant on others' advice and opinions. They're not investing with facts. We want to invest with facts. As an inside investor and as a wealthy individual, we always go in with facts. In every single investment or business that we do, we have all the facts. We listen to other people's opinions, but we always invest and measure return on investment with facts. We don't go with opinions. It is never too late. As a millennial who has been living by the outdated financial advice they were raised with, here are a few things we may do to improve our financial future. Invest in learning about finances. Assume control of our financial destiny. Don't count on anyone else doing it for us. And don't expect it. Don't expect the government to give us anything either. Go through our schedule and ruthlessly eliminate anything that takes up our time but does not add much value. After that, complete a course of financial education that has been prescribed. Get a mentor, read blogs and books, listen to podcasts like Master Investor, go to workshops and network, and actively invest. Invest with a plan and control the assets, control the company, incorporate, do the boring things, the legalities, make sure that they are established. Treat a small business as a huge or big business, and treat a big business as a small business so that we don't miss any stones. We are turning every single stone as we grow our business, and we maintain the legalities even when our businesses are growing. We have to always ensure that we are on the side of the law so that we don't jeopardize anything that we're doing. Quit saving for retirement. Instead, invest in sound assets through having a winning business plan with a lucrative exit strategy. Furthermore, begin saving for investments, not for retirement. Don't simply sit on our savings now that we have acquired new financial skills. Invest it in the right places. And don't assume that this applies only to the stock market. Consider all the asset classes that we talked about, the 5 different asset classes: business, real estate, crypto, paper assets, commodities. Learn, start little or big, and grow from there. Treat it like a video game in real life. Learn to put off getting satisfaction. It will be tempting to treat ourselves once we begin to experience some investment success. Do not, at least not right now. Instead, put our money to good use by investing it. After we have learned how to invest, use our cash flow to pay for our liabilities, such as holidays, cars, and other items that we want to have. However, only after our income from investments has taken the place of our wage. Hold off on gratification until then. Our financial situation will shift if we do these 3 things, and we will be miles ahead. Turn investing into a necessary life skill. We have the potential to be more than just a worker bee in life. Our brains are fantastic at picking up new knowledge and developing new abilities. We may have a wide range of skills, both male and female can do this. We can pick up knowledge that will be helpful to us and apply that knowledge immediately into our lives and see the results happening in real time. When we decide that it is crucial to us, we may cultivate untapped abilities. If making money via investments is important to us, we can learn new skills that will give us freedom, time, and tremendous pleasure in our lives. Just as individuals enroll in our financial courses to learn how to play in the real game of money, individuals enroll in courses to learn about anything, such as to play an instrument, cook a gourmet dinner, or ride a motorcycle safely. We may devote some time to learning new things after completing our official education at high school and university. People are, however, less inclined to seek solutions if they are unaware that a problem exists. If our goal is to be financially independent, start by putting these ideas into practice. Our life may be transformed by these skills. The 17 most known lessons for mastering money and building wealth by Master Investor. What does it mean to be financially educated? That is a great question, and the answer varies widely depending on who we ask. Teaching children how to save money, manage a checkbook, and use credit cards responsibly is one definition of financial literacy. For some, it involves instructing them on how to manage a 401k and invest in the stock market. And all of this is fake assets, right? Because they don't put money in our pocket. However, some people have that advice as the right advice, not knowing that there's a problem and there's a flaw in that advice because the new rules of money have emerged. For some, no matter how they define financial education, one thing is certain: our schools lack it almost entirely. Today, we must obtain modern or high quality financial education to be able to succeed. The new rules of money are here, and the old ones do not longer work to win in today's economy. About half of American adults are financially literate, according to the World Economic Forum. Furthermore, over half of Americans refrain from investing since they are uncomfortable with the degree of understanding. This raises the issue of what teaching financial education in our schools will look like. These are the 8 essential words for true wealth. As we can see, we have a simplified financial statement on the screen. We have the income statement, the balance sheet. Inside the income statement, we start with the word income, and then we go to the next one, expenses, and then we go to the balance sheet. We have assets, liabilities. We have cash on the left side, and then we have buying power, we have credit, and then we have net. And we need to figure out how to manage our cash flow and how to make it work hard for us through sound investing. We need to focus on the assets column specifically, not in the income column. Our focus is on the assets column by acquiring assets that produce passive income, or also known as positive cash flow, over capital gains income. We prioritize passive income as our choice of income, of the 3 types of income. Master Investor's Complete Guide to Financial Education. The following 17 fundamental financial education lessons are necessary for accumulating wealth. These are important lessons to learn and study independently as part of our financial education, even if we are not longer in school. And regardless of how successful we are today with our businesses, these lessons will help anyone raise their financial awareness, and therefore helping us raise our bottom line, or also known as our positive cash flow. Financial education must be something we continue to seek through our journey. Lesson number 1, money's history. Understanding how money functions is crucial, and a portion of that involves researching its historical usage. Over the centuries, money has evolved from something relatively straightforward, like bartering, to something quite complex, like the derivatives. It is not longer concrete and intuitive because it has transformed from an object to a concept, to an idea backed up by confidence, literally, because money today is fake. It's not real money. It's created with debt. And that is what majority of people are missing in their life. They're understanding that today money is created with debt. And therefore, there are 2 types of debt: good debt and bad debt. And we don't need to be afraid of debt. We need to embrace debt and use it to our advantage to become wealthy fast, and with paying less in taxes, because generally speaking, as we know, all debt is tax-free because money is created with debt. And that's what the law says. To accumulate wealth, it is critical to understand money. The following are some significant dates. 1903, the U.S. educational system is taken over by Rockefeller's General Education Board. The Federal Reserve is established in 1913. 1929, the Great Depression happens. The Bretton Woods Accord of 1944. Nixon removes the dollar from the gold standard in 1971, specifically August 15. That's when money became debt. We went from having a money that was backed up by gold to being backed up by an idea, backed up by confidence. It became monopoly money, fake money. Today, money is a currency, a full currency. It's not real money. Congress enacted the Employee Retirement Income Security Act, also known as ERISA, in 1974. That was basically the first 401k, perhaps. Read our article on fake money if we want to discover more about how our life is being influenced by the history of money. Lesson 2, knowing our personal financial statement. Our banker never requests to see our report card. A banker wants to see our financial statement, which is similar to a report card from school. Knowing how to read and comprehend a personal financial statement is one of the cornerstones of financial literacy. Get our digital courses to find out more about the personal financial statement and how to start using one right now. One important conclusion is that it is more about how much money we keep than how much money we earn, income. One of the main difference between the poor and wealthy is our financial education. People that lacks financial education and wealthy in the wealthy context simply lacks financial education. People that lacks wealth in the wealthy context lacks financial education. Lesson number 3, understand the distinction between assets and liabilities. So it's not how much money we make, but how much money we get to keep, because we're using debt, we're using the tax code and the corporate laws to minimize taxes. We are creating passive income. We are focusing on the assets column rather than our income column, which is very important. Once we focus on the assets column by acquiring real assets or building them from scratch through investing, then we can create passive income, and that income will begin to pour into our income column. But it's coming from the right sources to create wealth from the assets column. And we are devoting time to acquire the real assets, not fake assets. We're not giving our money away. We are actively investing ourselves. And we are also continuously investing in our personal financial education so that we can continue to grow our financial IQ and solve bigger financial problems. And that is how we become ultra wealthy, by solving the right problems in the world with the product-based business. One reason that so many individuals experience financial difficulties is because they conflate assets and liabilities. For example, many individuals consider their home to be an asset when in fact it is a liability, because it takes money out of their pocket and they have to work every single day to pay the mortgage at the end of the month. Now, if that person leaves or rents part of the house to tourists in the short-term rental industries using Airbnb platforms, etc., then that house becomes an asset once it starts putting money into that person's pocket, enough money to pay for the mortgage, all the maintenance of the house, the taxes, and also leaves them with positive cash flow after all expenses are paid every single month. Then that house can be called an asset then. But until then, it's a liability. A basic difference between the two is that a liability is something that takes money out of our pocket, while an asset is anything that puts money into our pocket whenever we're not working. We have probably believed throughout our lives that generating money requires concentrating on our earned income. We will discover that the secret to achieving financial freedom is to concentrate on our assets column, specifically building passive income. Learn how to turn our debts and liabilities into assets. With financial education, we can do that, because all of our liabilities and expenses at the end of the day are somebody else's assets in their assets column, and we can oftentimes turn liabilities into our assets, and they would still remain other people's assets as well. But we have shift the way the cash flow is flowing, and now we're generating cash flow with that liability, which now is an asset because it's putting money into our pockets. Lesson number 4, prioritize positive cash flow before capital gains income. Many individuals invest for capital gains income, which means they are wagering that the price of an asset will increase, praying for it. Regrettably, this is a bet that is not always successful. Rich people invest for cash flow rather than capital gains income, which are optional and can occur The primary distinction, real estate will serve as an example. Investing for cash flow involves purchasing a property and renting it out to generate monthly cash flow, which turns it into a sound asset. When we purchase a property with the intention of selling it after the price has increased, this is known as investing for capital gains income. While this strategy can be effective at times, the property is considered a liability rather than an asset, since it's not generating any cash right now while it is waiting to be sold. Rather, it is costing us money. Learn more about the distinctions between capital gains and cash flow from our other articles. Lesson 5, 3 income types. Not everyone makes money via paychecks. In fact, wealthy people thought that there are 3 different kinds of income: earned income, capital gains income, and passive income. We earn money through earned income. If we have a job and get a paycheck, that is ordinary, or earned income is taxed at the highest bracket. It's too difficult to become wealthy and have freedom by just focusing on that income. We earn money through capital gains income if we profit from the sale of assets. Passive income, the third type of income, is income earned without the need to work via business or investment, which is composed of a system of systems. The true meaning of wealth is generating money through passive income. Learn more about the various income categories here. Lesson number 6, the cash flow circle. Master Investor claims that there are 2 kinds of people and that they see the world through the 2 distinct sides of the cash flow circle. In conclusion, employed and self-employed people are on the left side of the cash flow circle. They exchange their time for money and pay the highest in taxes. Moreover, each one has a unique way of thinking. There are 4 types of people in total and 2 sides on the cash flow circle. The business owner and inside investor are the 2 types of people that operate on the right side of the cash flow circle. And we focus on controlling systems because we are providing a solution to the world, and we are using our knowledge, financial knowledge, to multiply the profits that are coming in from our businesses and from any sort of loan that we are getting, any type of debt. We are using our financial IQ to put that money to work in the right places by investing it in different asset classes to produce passive income. We pay significantly lower taxes than those on the left side of the cash flow circle, but we create or invest in assets that generate income for us even while we sleep. Explore the cash flow circle in greater detail inside of our digital courses. Specifically, how to build cash flow with the intern passive income money is a great digital course to start with. Make sure you check it out. Go to our website and start investing in our digital courses here at Master Investor. We are adding more assets in each digital course to help our members grow our financial IQ. Lesson number 7, savers are losers and good debtors are winners. President Nixon altered the monetary rules in 1971. He closed the gold window that year, converting our gold-backed dollar into a currency overnight. Despite being one of the most significant monetary changes in recent history, few individuals understand the reasons behind it. This shift is what caused savers to lose out. Inflation is causing the dollar to continue to lose value. In essence, our money will be able to buy less in the future than it does now. So keep this in mind. Money flows like a current. It will die if it doesn't move, and it loses value. It goes back to its intrinsic value, which is 0 once it stops. As a result, savers suffers. The most important words, as I mentioned earlier on our talk in the business language, are cash flow. And cash flow, that means that our money must move from a cash flowing asset to another cash flowing asset. That's why we keep the value of our money. The second it stops, whether it's in a bank account, whether it is under the mattress, the money goes back to 0. So our duty is to keep that money moving fast from a cash flowing asset to a new cash flowing asset in a different asset class among the 5 different asset classes that exist. That's how we protect ourselves from down economies and hedge for inflation. So keep this in mind. And to learn more about how to utilize debt, get inside of our digital courses and read our other articles, because we have talked about this extensively. Lesson number 8, our net worth. Our bank account balance or net worth do not reflect true wealth. Our wealth number determines our true wealth. In summary, we have an unlimited wealth score if we earn more money from passive income than we spend each month. The question, if we and our partner, spouse, stop working today, how long could we survive financially? Has two crucial components for determining our wealth number. If we quit working now, this implies that we will not longer receive any earned income. For any reason, we are no longer able to work for a company or employer, thus we are not earning any money from those sources. How long could we last money-wise? And however many years, days, months that will be our wealth number. Determine our net worth. Financial education must be acquired to really understand how to build wealth. Lesson number 9, fundamental versus technical investing. Understanding a financial statement is the first step in assessing a company's financial performance, which is what fundamental investing is all about. Technical investing involves gauging the market's emotions or moods through the use of technical indicators. Both kinds of investing may lead to success, but they both need dedication and ongoing financial learning. And of course, financial experience. The 3's of a master investor: number 1, financial education; number 2, financial experience; and number 3, excess of cash flow. Discover the distinctions between fundamental and technical investing in our other articles. Lesson 10, understand how to evaluate an asset's value. The 5 asset categories are business, real estate, crypto, paper assets, and commodities. To get wealthy, we must learn about these categories. Select which one is best for us and strive to become an authority, and then begin to invest among the other 5 asset classes. As we get in profits from one asset class, we grab that passive income and then we invest it in a different asset class for passive income. And sometimes we will have to invest for capital gains income, because certain assets will only give us capital gains income. Lesson 10, understand how to evaluate an asset's value. So focus on how to read financial statements. The realm of investing is repleted with possibilities. This raises the question of which investments are worth chasing. A fundamental aspect of comprehensive financial education is learning how to assess whether an asset is of high quality. One of the most effective methods to accomplish this is to consult the cash flow triangle, or business owner and inside investor triangle, which considers all of an asset's attributes, including esteem, leadership, mission, cash flow, communication, systems, legal framework, and product. Those are the 8 integrities of a successful business: mission, team, leadership, cash flow, communication, systems, legal, and product. A lot of people think that the product is the most important aspect or attribute of a business, and it's not. And so we need to look at all the 8 integrities and make sure that they are high quality and that they're well established in the business that we are creating or the business that we are going to invest in. Because if one of those 8 integrities are missing, then that business is not worth investing in, because it's probably a toxic investment. The value of the business goes down when one of these 8 integrities are missing. Lesson 11, know how to select good people for our businesses. Partnerships are essential for business success. The best way to know a good partner is to have had a bad partner. If we have a terrible partner, Allah may explode. This means that selecting team members and partners carefully is essential. We must gain knowledge from each encounter. That's how we become a successful leader on our journey to financial independence. Lesson 12, understand when to diversify and when to concentrate. We should aim to be diversified across all 5 assets classes that exist, but we should concentrate on mastering one at a time. If we try to please everyone, we will please no one. The same might be true for investing. Lesson 13. Reduce the risk of our investments. There's always a degree of danger involved in commerce and investment. A wise investor understands how to reduce risk through hedging, and there are several methods to achieve this within each asset class. And of course, by always investing with insurance, because that's how we ensure that we protect ourselves from anything going wrong. Investing can be dangerous for 3 main reasons. Educate ourselves on strategies to reduce risk in our selected asset class. Here are the 3 main reasons why investing can be dangerous. 1, insufficient training. 2, loss of control. Number 3, inadequate knowledge or the wrong mindset in regards to money, operating with the old rules of money and not updating it with the new ones. To reduce the dangers related to investing in commercial activities, consider the following advice. Lesson 14. Increase our income through taxes. It is not about how much money we make, it is about how much money we keep, and keep working hard in sound investing, as we stated earlier. Our greatest cost is taxes for majority of people. For those on the left side of the cash flow circle, and majority of people in the entire world are operating with the poor mindset. They operate on the left side of the cash flow circle and they pay the highest in taxes. Those on the right side of the cash flow circle, we know how to minimize taxes. Therefore, we don't pay taxes in our lifetime. We learn how to use the laws to our advantage legally and ethically. For this reason, it is crucial for our financial literacy to comprehend how to most effectively reduce taxes legally. A financially savvy individual knows how to exploit the tax code to our benefit. To find out more about tax savings, go to our website and get our digital courses. Lesson number 15, master the 2 types of debt, good debt and bad debt. As most of us are aware, debt may be categorized as either positive or negative. We will quickly lose credibility if we don't have a concrete strategy for repaying our debt. The secret to leveraging debt is understanding how to take out loans responsibly and how to repay them by investing those loans into the right assets that will produce enough passive income to cover the interest service, the debt service, and any interest of that debt will be covered by the business itself, by the income from the business. And so it's all about learning how to manage and how to allocate debt and the right assets. The wealthy invest in cash generating assets using other people's money, OPM, which includes the money of investors and banks, and use good debt to increase our wealth and minimize taxes. A comprehensive financial education will cover these various forms of debt as well as how to repay them. To build wealth, we must master good debt and bad debt. Good debt gets paid with other people's money, with the business money. And bad debt is the type of debt that we have to take care of it because it's something that we obtain that we want to have in our lives. It's a car or is an item of luxury. However, it doesn't mean that we should shrink when we build wealth. In fact, we're going to expand good debt and also bad debt because as we become wealthier, we want to have certain things in our life and we can't afford it because we have assets that will pay for any bad debt. And therefore, everything will be free at the end of the day, legally. The wealthier we will become, the more debt we should have. Whether it's good or bad, we know how to manage debt. It is key to first focus on using good debt to create passive income, then use that income to acquire other sound assets and whatever liability we want to have in our lives. At the end of the day, we can reach an infinite return on investment when we use debt to invest in sound assets, and we can reach it faster. The more debt we use, the less taxes we will have to pay, and we can reach that infinite return on investment breakpoint faster, because when we use 100% finance, the second that we begin to collect passive income from the business, that is infinite return on investment, because we have none of our money into the deal. We are using 100% debt, and that debt is creating passive income. Therefore, that passive income is money for nothing. That passive income is infinite return on investment. People who lack modern financial education preaches get out of debt to build wealth and encourage others to not use debt. The more money we get to keep to continue to invest in sound investments when we use debt too. So when we have our own capital and we raise capital at the same time, and instead of using our capital first, we use the loan or debt that we acquire, then we get to keep more of our capital to invest in different areas and different assets, and we can raise more capital. So we use debt as leverage. We use it as a tool to become wealthy. In our community at Master Investor, we encourage our members to use debt as much as possible and create passive income with it. Our partners here at Master Investor know that debt is valuable to building wealth, and debt is today's money. Debt provides us with many advantages, such tax advantages and leverage. We can get wealthy for free legally and obtain anything we want for free by positioning a business to solve a problem. Once we begin to receive the passive income, positive cash flow from the business, then that money will be used to buy what we want. As an inside investor, we must invest in financial education and continue to take control over our financial decisions. Lesson 16, understand how our money is stolen. Taxes, debt, inflation, and retirement are the four factors that deplete majority people's wealth because they lack financial education. Therefore, they don't use taxes and debt, inflation in early retirement towards their advantage. They're using it the wrong way. They are on the wrong side of the cash flow circle. So taxes, debt, inflation, and retirement is not on their favor. A good financial education will emphasize learning how to profit from these wealth stealing factors rather than losing money. Here's how to stop these con artists from taking our money. Invest in the proper financial education to ensure we know how to invest in sound assets and avoid toxic investments. Lesson 17, understand how to error. Learning is impossible without encountering some errors along the way. Learn how to fall smart. The important thing is to not let those errors drive us off the game and to take their lessons to our heart. View failure as a chance to learn and grow. No matter which route we choose, the most crucial thing is to get started. Getting started, many of the truths we share as a Master Investor are covered, and they provide numerous ways to enhance our financial knowledge. Here are some free choices. Listen to our podcast on the go. Check out more articles on our blog about financial education. Take part in one of our financial literacy courses. Are we prepared to start accumulating wealth today? As we can see, the wealthy mindset, about 3% of the population. We focus on investing in financial education and acquiring real businesses that produce passive income, real assets, and then our expenses column will have as priority acquire assets. So before we pay anybody else, we're paying for our assets. We are going to pay for our investments. We are going to put our money to work in sound investing so that we can minimize taxes. We pay taxes, if any, because we're using the tax code to minimize. We're using debt to minimize taxes. We're using business expenses to minimize our tax burden legally. And then we acquire liabilities because we have the assets to acquire those liabilities that we want. Wealthy people buy or acquire assets first before tax dollars and pay zero in taxes in many occasions legally. Then we acquire liabilities by having the assets pay for the expenses of the liabilities. We can obtain everything for free legally. All is done legally using the tax code and corporate law and to our advantage. We can only accomplish this by having modern financial education. Bonus question: what are the essential points for a business plan? The secret to building a successful company is to write a good business plan. A business plan is essential regardless of whether we need outside funding. Our business plan will be successful if it includes these essential elements. The need for a business plan is up for question among professionals. Some claim that a business plan is only necessary if we are asking investors for financial assistance or a loan. Some have engaged or even argued that the time it takes to develop a business plan might hinder the launch process and result in lost opportunities for a small company. Here at Master Investor, we believe that a company plan is crucial for success. In fact, we define investing as having a winning business plan with an exit strategy that is lucrative for the individual or the partners. Writing a business plan is essential, regardless of whether we need outside investors or no. The process of creating a successful strategy necessitates that we devote a lot of time and effort to researching and considering our business. We need to gather all the facts, and we will only invest with facts, not opinions. It is important to remember that strategic planning also involves writing plans to help establish companies expand, although that topic will be covered elsewhere. The goal today is to establish a structure that will persuade us and an investor that our plan includes the elements necessary to be one of the 5% of new firms that succeed. Unless we educate ourselves on the realities of winning plans, our plan will probably end up in the trash bin because wise investors and lenders are aware of the ads. Having the right financial education is the way to stay ahead and not be an average investor. The benefits of writing a business plan: before we have even entered the trenches, we are essentially laying the foundation for how our company will run by taking the time to write a business plan. Our business plan will help us with our startup, daily operations, allocation of resources for the company, specifics and boundaries of our partnerships with our business partner, and a clear view of our organization, allowing us to make educated decisions about the cost of our services and products. We want to focus mainly on building and acquiring products-based businesses instead of services. Simply put, that when we have products, then we can sell to the masses faster and with systems allowing us a higher return on investment. Additional benefits include: 1, writing the narrative and outline of our company; 2, asking and responding to questions that would otherwise go unanswered; 3, think about the legal and financial considerations; 4, with prospective investors, partners, and even clients, be sure to clearly express the possibilities of our company and the liabilities of the investment. 2, numerous resources are available to assist aspiring entrepreneurs in developing the ideal business plan. Find our contact information to start building the right business plan. Go to our website, check out our consultations and other options that we have to help our members put together the right business plan. But if we are a startup or have been in business for a while, here are the 4 most critical elements to include in a winning business plan. 1, the company. This section, also known as business description or business strategy, may have subtopics like location, product offering, product or service, records and insurance, business opportunity, legal structure, business model, organization and operations, operating procedures, management, personnel strengths and weaknesses, core competencies and challenges, business accomplishments, and operations descriptions. Be sure to sell the one reason why our business will be able to produce a large amount of cash flow in the business section. Keep in mind that our sales are based on conveying our knowledge and experience, not on using meaningless phrases and promises to promote our business. 2, the marketing. It also goes by the name market strategy, and it has sections covering topics like target markets, customers, competition, distribution, relationships, advertising, pricing, industry and market trends, strategy and market strategy. The industry and our company's position within it are covered extensively in the marketing section. It encompasses every force that it impacts our company. This section provides the reader a comprehensive overview of how our business will handle bringing the product to possible consumers, covering everything from pricing to advertising, industry trends to the global economy, and clients to rivals. 3, the finances. The deal, also known as financial data, comprises sections such as assumptions, budget and break-even analysis, capital spending plan, income forecast, sales revenue forecast, income projection, profit and loss forecast, cash flow forecast, balance sheet, income statements, and uses of funds. The numbers are the focus of the financial chapter. The past, now, and future are all represented here in this section. 5, the supporting materials, the kind of business we are considering, and the rest of our plan's contents will determine what material we use. Resume, credit reports, letters of recommendation, legal documents, contracts, and agreements are typical supporting materials. This is material that is either covered in the prior section of the plan or does not need any textual introduction or explanation. Ideally, by the time the plan is finished, we will have all the knowledge necessary to meet everyone's requirements. The actual labor involves gathering the preliminary data. It shouldn't be too hard to arrange it in other ways. Whatever plan we select, make sure we have everything covered, including the liabilities of the business, which is very important for investors to know and whoever is looking into possibly investing with us. When creating the plan only for the purpose of obtaining a loan, it might be enticing to leave out the management details or to leave out the financial details if we're making the plan just for our own management needs. As we can see on the screen, we have the cash flow tetrahedron. This is the way we strategize to invest here at Master Investor. We focus on acquiring and building businesses that are sound, that are producing passive income. These businesses are solving problems in the world with a product that is valuable and that is in high demand. And then the profits of those businesses will be used to pay for our expenses and to also buy other businesses and invest in different asset classes. We can see we use that income to invest in real estate, to pay for our expenses and to also create more passive income to buy other assets in different asset classes such as paper assets, crypto, and commodities. Use the cash flow tetrahedron to invest to become successful when managing our wealth. Develop a sound business strategy. Entrepreneurs who are willing to put off immediate gratification are more likely to have successful business plan. They invest the time and energy needed to get the appropriate training and experience, and we take chances. Since errors and failure are experienced, we are not scared of making them. We acknowledge that experience leads to increased competence, therefore we start out little and grow. Paying the cost gives real entrepreneurs the knowledge we need to create a successful strategy in business. Financial education is the cornerstone of true wealth and the ability to print money like the wealthy do legally. Are we ready to master the ability to raise capital and become an inside investor, a true capitalist? Those who have the wealthy context will succeed in the economy that works with debt and inflation. The more the government prints money, the higher the inflation will have, which means the poor and middle class will lose because their money loses value. The business owner and inside investor will thrive in such economy because we are working with the new rules of money. Start investing in financial education and applying a business plan into action. Take control over our finances and multiply money in sound investing. In order to build true wealth, master sales through a system of systems by controlling businesses that are solving problems in the world, and real estate using debt. And of course, use debt overall to invest not only in real estate, but among the 5 different asset classes that exist, which are business, real estate, crypto, paper assets, and commodities. Start investing in high quality financial education by reading our financial ebooks here at Master Investor, the 10-year rules of money, how to build cash flow with the internet, turn passive income on, how to invest in crypto to build wealth, understand the Bitcoin and blockchain, the rise of legitimate reserve digital currencies and assets. Find all of our ebooks on our website. Also, we have resources and tools for our members. We have content on our Instagram, podcast, newsletter, YouTube, TikTok. Get inside our digital courses. Go to our Facebook page. We have a Discord account for all of our members, and join our inner circle. Master Investor's mission is to be the authentic global brand for money, business, and investing, elevating the financial well-being of humanity through high-quality financial education made simple with lucrative opportunities to build passive income, win-win partnerships, and true wealth. We are reading What is Modern Financial Education? Make sure that we leave a comment or a question. If you have one, drop it below. We're going to come back and have an open dialogue to help emphasize on today's topic on why it's important to have modern financial education. I appreciate the time bringing you the good and bad news of money, the business principles that work in all economies. Ensure to go to our website, get inside of our digital courses, stay extraordinary and wealthy. Talk to you next time. Bye for now.